we are ready to introduce the next part of the conference. We are having the last panel for today. It is the panel related to secondary markets for digital securities. And this is one of the most pressing issues in the industry. We've seen people for 2 years begging for good liquidity and secondary markets to emerge. And we have many exchanges at last getting regulated and emerging. And now the next step is for these exchanges to solidify, to get enough trading volume and activity. And whether you're an investor or a business, you need to know the future of secondary markets to make informed investing or business decisions. So today we're going to get the knowledge from people who are the closest to what is actually happening, to people who are C-level executives at regulated exchanges that are creating the future of digital securities industry. I would say very strong people who have been able to pass through all the hurdles and complexities of the regulation process. And I am amazed by having 4 of such great individuals today with us. So waiting for you to join us. Hello, everybody. It's a pleasure to see you here.
Hi, good morning.
Thank you for being here on time.
Hi. Thanks, Boris. Thanks for that introduction. We're all very pleased to be with you here today. Good morning, good afternoon, good evening, everyone, wherever you are in this global audience. Glad to be chairing this final panel with some great friends from the industry too. So looking forward to the next hour or so. So just to kick off, kind of echoing what Boris just said, if you kind of look at the history of crypto in its broadest sense, cryptocurrencies came along, then came ICOs and utility tokens, and then emerged sort of STOs, those sort of regulated tokens off the back of the technology that underpinned all those other types of tokens before. And I think it's interesting because, STOs have been the next big thing for the last couple of years. Everyone's been kind of waiting for them to really take off. But maybe they haven't quite yet, and maybe they're about to. I think that's one of the things we're going to chat about today. I think digital securities or security tokens, and we use those terms interchangeably, by the way, they kind of mean the same thing. But by their regulated nature, they have a certain amount of inertia in them. And maybe that's why it's taking a little longer for things to really take off. But also, I think the advent of secondary markets is key. Regulated secondary markets is what is going to really help drive the adoption. Is it going to bring in retail? Is it going to bring institutional money? Is it going to do all of the above? Well, that's what we're going to discuss today. But to kick things off, I'd like to introduce the panel. In fact, I'll let them introduce themselves, and we'll follow the global clock and start over in Japan, where it's early evening, I guess, for you, James. But James, you'd like to introduce yourself and Standard Capital.
Yes, so hello. Thank you for having me today. My name is James Parker. I'm from Standard Capital. We are an exchange based in Japan and the Philippines, or SEZA. We are a security token exchange.
Great, thanks for that, James. And next on our global journey is Mike Kessler, who is sitting somewhere in a gloomy London, like I am, I think, on this rather gloomy Saturday morning. But Mike, introduce yourself and Tokenise.
Hi there, hopefully you can hear me. So I'm Mike Kessler. I'm CEO and founder of Tokenized Stock Exchange. We're an exchange that's regulated over in the Caribbean, but we've also got regulated activities in the UK as well with the FCA. So we're looking at becoming a global exchange, but with international parts to it in terms of access points, but a single global order book. So that's what we're doing.
Thanks, Mike. And finally, Douglas, over to you. It's like 5:30 in the morning or something for you in New York, I think. So thanks for getting up so early and seeing us. But please introduce yourself and INX.
It's my pleasure. Thanks for having me. So I'm Douglas Borthwick. I'm the Chief Marketing Officer and Head of Business Development for INX. INX is a company that will be going live in the first quarter of 2021. We're currently doing our IPO. It's the first IPO in the blockchain. We're an SEC regulated security, SEC registered security. It's the first time that anyone's gone through the whole process where it's not sort of a Reg D or Reg A plus, but actually an F1, which is the foreign equivalent of the S1. So it's we've got a huge, big prospectus. We've got a lot of transparency, and we're doing something that's a little bit different, I think, from the others in that we've got two platforms. One is the trading of cryptocurrencies, and the second one is the trading of security tokens. Great,
thanks, Douglas. And finally, myself, Simon Barnby. I'm Chief Marketing Officer at Archax. We are another UK-based company. Recently got our regulation from the FCA to launch a regulated digital securities exchange alongside a brokerage and custodian. And similar to INX, we'll be launching in the first quarter of next year. So to kick things off, Mike, I'm going to turn to you because and get your view, I think, first, and then we'll circle back around the others. But I kind of guess where I wanted to start was, what are we seeing currently? What are the types of issuance that are coming along as STOs that want to list on exchanges? Where is the current activity? And then a bit later we'll move on to where we see it moving in the future. But give us this kind of status of how you see things right now.
Okay, so I see things slightly differently maybe to some of the other people. So I think in terms of we're seeing, in terms of the people that are interested in doing some potential listings with us, is not necessarily in the plain vanilla equity arena, because I think there's so many different avenues that these people can go down if they are just doing a plain IPO for equities. I actually think that the digital security space, especially whilst it's in its nascent stages, will be far more kind of in the esoteric stages of capital markets. So whether or not it's trading things like bonds on a full exchange rather than over the counter, I think you'll see things like fractional ownership of property. I think you'll see things like royalty tokens taking the fore, and just coming up with slightly more innovative approaches or kind of hybrids of these. So I think that there's things like royalty tokens, which are a bit like a preference share and have some of the hallmarks also of a bond. So I think that people will start creating things that actually give better access to capital markets, potentially give more capabilities to the investors. So I always liken it to, I would rather own 1% of the profits in Apple rather than 1% of the equity in Apple, because that way I'm in control of the destiny of where those things are going. So I think the markets in general are looking for something a little bit different, because if we're just the digital exchange, and let's face it, all of the exchanges are digital exchanges. They're all trading electronically, but what they're trading, they're not trading the tokens, they're trading the actual instruments. But it's just a number, it's just a unit in the same way that it is for a share. So I think that although people are most familiar with equity, and we will see equity trading taking place, I think for the smaller exchanges, I think it is being able to change what was considered complex and doesn't typically trade on a stock exchange, being able to trade on a digital market.
Yeah, thanks for that. I agree with a lot of what you're saying there. I mean, I think it's interesting, existing exchanges are digital, but I think, one of the key differences is, DLT, blockchain technology can bring all sorts of benefits post-trade, which is something we'll touch on later. But Douglas, over to you. I mean, like Archax, your INX are launching in an early part of next year. I know from previous conversations you have a pipeline of people coming to list with you. How are you seeing the landscape? How are you seeing things pan out for you guys in the US at INX?
Well, I think that there's a lot of different projects out there, but we've got to kind of think about what's going to be exciting to get people motivated. I think that we're interested in projects that retail can trade from the get-go. And right now, the only security token that we know that could be traded by retail without any lockup period is the INX token, because it went through the F1 process. But on top of that, we've got to find something exciting that get millennials interested. Millennials, of their top 5 holdings of equities right now, GBTC is one of them. They own more GBTC than Netflix. They own more GBTC than Disney. So for them, digital is the future. So I need to find the types of things that's going to get a millennial very excited about trading on a security token platform. Now, what do millennials like? Well, they like video games. So I like the concept of having video game tokens that can be used in game and also be traded out of the game. You know, my kids spend a lot of time playing video games. They accumulate a lot of points, and they can't do anything with those points. Now, if they could sell them on an exchange, that'd be great. They wouldn't have to get jobs. So that's the kind of thing that excites me. That attracts, I think, the younger generation to an exchange. Other things that interest me are taking of a dead asset and then finding a way to be able to trade it. Let's say you're looking at whiskey, Scotch. You know, Scotch, 25 years and it's sitting there in a cask. Normally, I spend my $500,000 and I buy a cask and then I share it with my friends. And then in 25 years, it comes out and it's bottled, and then we all get the bottle sent to us and we can drink it. 25 years is a long time, Simon, to have your money tied up. So I like the concept of, you know what, why don't you just tokenize it, own it, and then after the first year, maybe you could sell it to somebody. Maybe after the third year, the fourth year, the fifth year. But having a liquid market in a liquid product that traditionally trades illiquidly. The other thing I like, and I'm talking to some folks in the Hollywood area, is the tokenization of, and you talked about royalty tokens. You think of Mariah Carey. Mariah Carey, every Christmas season, I don't know how it is in the UK and in Asia, but every Christmas season, her Christmas songs come on and she gets a check for something like $15 million. Now, why does Mariah have to wait every year to get her 15 million? Why can't she get 150 million today? And the token holders then own the royalties to all of her Christmas songs going forward, and they can trade that. I'd love to own that. Think of the correlation between heating oil and Mariah Carey royalties, in that as soon as it gets wintertime, Mariah Carey royalties are going through the roof and the heating oil is going through the roof, and which find a whole new way to hedge Mariah Carey through heating oil. So I think there's some exciting things. Now, obviously, real estate is where people are looking at right now. Real estate can be interesting. You can get a big high dollar number, and that, you know, it's a $400 million deal, a $300 million hotel here or there, but it doesn't get a lot of volume, because generally the person that buys that real estate, they'll hold it for quite some time, and it doesn't really get that rush of excitement from the media. And I think that as we're growing these businesses, we need to be able to get something that gets people excited, because nothing is more boring than the term security token or you know, electronic wallet. And as soon as you mention that to people, their eyes glaze over and they fall asleep, and you've lost your audience. But if we can give people things that are truly exciting to them, whether it's alcohol, whether it's you know, royalties to do with some famous person, whether it's video game, but we've got to find the way to get that trigger and to get people to get excited about something that we're already excited about. And the crazy thing is, the way that security tokens have been sold, I think up to this point, it's sort of like, it's been sold to that 0.2% of the population that cares about crypto. But then I think that's crazy, because 80% of the population has equities in some way, and we haven't been able to break through to the equity holder, because that equity holder needs to understand, you know what, there's something here that's exciting. Now, it's been hard to do because traditionally security tokens have only been for accredited investors. So maybe you have 1,000 people that care about a deal. But the way things are going in the United States, and certainly the breakthrough we had with the SEC, tells us that retail soon will be able to trade these products. And it's our interest to have someone that's trading crypto hit a little tab and then start trading security tokens and say, oh, you know what, this is an interesting thing here. I'd like to see this. But security tokens, I don't think will get sexy to the market until GQ's writing about it. And GQ is not going to write about a security token that's real estate. They're going to write about something about, you know, alcohol or royalties for an actor, or royalties for, you know, an athlete in the NBA. And I think that, you know, we've got to find those triggers that get people excited and get the juices going. And until then, we're left with the security token that sounds so boring. But I will say this. I think that, you know, the SEC has made it very clear in the United States that security tokens may have been sort of a sleepy backwater for some time, but they're definitely pushing for AML KYC reasons to have all equities move onto the blockchain. And the reason is, when I have Nike stock today, I can give it to my mother. Nike doesn't know, and the government doesn't know. She can sell it. She could be a money launderer. But when it comes to security tokens, as we all know, when you sell from one person to the other, the issuer can see it, the government can look at it on the blockchain, and there's a lot more transparency. And the government wants that these days. They're pushing for it. And I think one of the most exciting things that we have is, you know, we're building exchanges all around the world. And we're going to find that the NASDAQ company that's got a sub $1 billion market cap is going to be convinced by their bankers that maybe they should float some of it on a digital exchange. And then you get the arbors coming in, the digital token versus the underlying. And we saw the same thing in currency markets, where people would arb the electronic on the IMM versus the voice. After a while, the voice disappears and it goes electronic. And so I think in the next 3 years, there's going to be a huge migration of assets onto the blockchain. And you want to have an exchange that can handle blockchain, because that's where the future is.
No, thanks for that. And certainly that point on liquidity is key. And I want to come back to that in a moment. But, a couple of things I'll pick up on there. One, when that $500,000 barrel of scotch turns up, I'm definitely coming around to yours to try some of that. And it's interesting, you mentioned these kind of exotic assets, Mike, you mentioned them too, and we're certainly seeing that at Archax, everything from race horses to container ships to art. I mean, people are looking to tokenize just about anything you can think of. I'm sure some will fly, some won't, but it's great that the technology is allowing people to innovate and come up with different things and approach things in a different way. But moving over to you, James, and what you're seeing in your neck of the woods. I mean, what is the market like there? What's getting traction? What's exciting people? How are you seeing things pan out for you guys?
Right. So our company is based in Philippines, but we actually operate out of Japan. Our license is in the Philippines, so we kind of have an insight into both, because we cooperate with the Japanese government as well. Because basically in Japan, it's not established yet. But in the South Asia, they're trying to get it established, because basically their infrastructure is not very good right now for security. So basically they want to jump to kind of the next level. And I think that what we're seeing is that the security tokens provide like an extra layer kind of like AML and KYC, and it allows for people from international markets to be able to participate in, like, I guess, Southeast Asian markets with confidence. And as Douglas said, it does kind of captivate the younger people as well. It's more interesting, talking about security tokens or crypto than just traditional, securities. Or it's not very interesting when you do that. But I also think that for security tokens, that it does invite retail, and that's a huge thing that really will boost this the kind of usage case in Southeast Asia, because you've got kind of this Indonesia, for example, is becoming more and more wealthy. Southeast Asia in general is, and you're going to see a lot of people wanting to accumulating money and wanting to park it somewhere, right? And security tokens are an attractive option for them because it's all online. The KYC is built in, and they can see the company. It's pretty trustworthy. So I think that's really kind of what I'm seeing in our region is in Japan there's still skepticism, but in South Asia there's more of kind of an interest.
Okay, thank you. Yeah, I mean, it's you kind of picked up on that technology point too. I think we need to not focus on the underlying tech. That's pretty much irrelevant. It's the use case, the business use case, that's important. Right. But obviously the tech that has other benefits, which we'll come back to later. But so a lot of you have mentioned retail, and obviously retail is important and exciting, and you only have to see what happened with the ICO craze as to the power of retail communities and what was driven there. But what about that wall of institutional money? At the minute, traditional financial markets, there's a huge amount of institutional activity and money there. When is that going to come across? Is that going to come across? How is it coming across? I mean, Mike, maybe kicking off with you. How are you seeing that side of things?
So I think it's an awkward one, and I think it's going to follow crypto markets in reality. So I think what will happen is you'll start seeing adoption by the retail markets. The retail markets then get noticed by the institutional markets, and they start playing in the same kind of sandpit. I think it's interesting about what Douglas was saying earlier about Mariah Carey and stuff, because I think really that's where we need to go. The most difficult thing about all of what we're doing is educating the masses as to what a security token is. And we try and avoid actually the term of using security token. Being called tokenized doesn't help with that, but we're kind of trying to go down that path so that if someone has a royalty, if someone has an equity, if someone has a fraction of a property, then that's what they have. But I think what's really interesting is there was a recent flotation that happened in South Korea with BTS. I don't know if anyone's heard of it, but it's a K-pop group. There was a management company, and they floated the management company who had 88% of their revenues coming from one K-pop group, and they raised $894 million. And on the first day of trading, it went up 90%. And that's because everyone wanted to buy one unit, one share in the management company, because that management company managed this K-pop group, which is the biggest boy band in the world at the moment. And I think that that's how we can get this this industry started, whereby it might be a celebrity, it might be someone who just says, do you want to earn a little part of this because I'm connected to it? And I think it's far easier for someone like Mariah Carey to say, I'm going to earn $15 million every Christmas. If we securitize that and you pay me that, whatever it is in advance, you can have a percentage of that every Christmas or ongoing or whatever it ends up being. And I think by having that, they can talk to a mass market. Don't forget, they've also got huge amounts of followers on social media. So I think if we can convince the generation, I don't know if it's Gen Z, Gen X, whatever generation it is these days, but I think what we have to do is we have to follow the pathway of the kind of retail investors. It is about educating them, and it's trying to tell them, actually, what you're getting here is just a normal product. It is a security. You do have the benefits of regulation. And I think over time, what you'll then see is the institutions will follow on the back of it. I think, but coupled with that, I think what you're going to start seeing is those brokers, when you start seeing, say, Mariah Carey is doing her royalty token or whatever it ends up being, you're going to see that the people that are signed up with TD Waterhouse, Charles Schwab, etc., and even places like Goldman Sachs, people may turn around and say, how do we get in, and can we use your institution as an inroad in order to do that? So that they put a bulk order in or whatever it ends up being. So I think there is going to be a bit of give and take. I think it will be retail driven originally, and then I think the institutions will follow suit.
Great, no, thank you for that. Yeah, I'm coming on to you, Douglas. Yeah, I know with your kind of hybrid INX token, I'm sure you're out talking to institutions a lot anyway. So it'd be interesting to get your view on that and how they will fit in, when they will fit in, and your views. Yeah.
So thank you. First thing I'd say that institutions, the portfolio managers have a strong interest in this area, but the infrastructure is not there in a 30 or 40 act fund in the United States. Now, by that, I mean a mutual fund may say, you say, look, the portfolio manager says, I'd like to buy your security. It's a security, it's registered, I'm allowed to buy registered securities. And then the back office there says, hold on a minute, let's look at the prospectus for all of the funds that we have within our institution. And the prospectus says that the institution can buy equities and fixed income. And security tokens are a different asset class altogether. And so because of that, these larger mutual funds that we expect that wall of money is unable to actually move into this space until they change the prospectus for every one of their funds. So that's probably the biggest limitation. So you're going to see it first, we see from retail. Retail has no limitation whatsoever, but there's a limited product for the retail to buy. Then there's what we see is the college endowments. They also have, they can make off the cuff decisions, and they can buy and they can get excited about it. Pension funds to a lesser extent. Family offices, absolutely. There's always a family office that wants to get involved. But for the largest institutions in the United States, the ones that we see is like, the mutual funds that you know about and you can buy into, you can forget about that, I'd say, for another 2 or 3 years, because they have to change so much documentation that they already have. I mean, it's an absolute, it's like trying to turn the QE2 or Titanic. It's just not going to happen overnight. Now, Simon, you brought up something really exciting, and that was racehorses. And I was having this discussion with a friend the other day, in that with betting, you can bet on the racehorse, but when the race starts, you can't do anything. But with the security token on that racehorse's bloodline, you could be buying and selling that security token on the bloodline, you know, on the stud fees during the race. And I think that that's one of the most exciting things that security tokens brings, and also is another kind of sexy point to security tokens, is that you've got 24 hours, 7 days a week trading of something. And the millennial generation, that's the Amazon generation, they really laugh at us. When bad news comes out on a stock at 5 o'clock or after at 4:30 on a Friday, and I say, don't worry, kids, I'll get out of it at 9:30 on Monday morning, they look at me like I'm an idiot. And that's the reality with equity markets today. And you know, if you're in Asia and you want to trade Amazon, what, you got to wait until New York opens? It's crazy times. And it's very much like the way that currencies trade to a greater extent. Something like the Korean won used to only trade in Korea and would have no trading in the US. Then they invented something called the non-deliverable forward. Now there's more volume in the Korean won in the New York time zone than there is actually in Korea on the spot. And I think that, you know, when you bring esoteric products in to create that 24 hours of trading, the interest becomes much, much greater. And there's a lot more excitement about it. But look, racehorses, to me, that's exciting. Alcohol is exciting. Real estate, it's a great announcement, $500 million deal, but it doesn't bring the eyes to your platform. It doesn't get people to sign on, and it doesn't get people excited about the product.
Great. No, thanks for that. I think the most obscure project that I've spoken to someone about is the tokenization of frozen pedigree racehorse stallion semen. Apparently, it's a huge industry. It's kind of, you know, stocks of it held in vast refrigerated warehouses. Sorry. I bet you didn't think we were going to talk about that today. But moving swiftly on over to you, James. I want to pick up now on kind of the whole liquidity area, because, you know, one of the criticisms of STOs so far and the existing STO markets, I mean, no criticism particularly, but they have been fairly illiquid. So how is that going to change? You know, how do you see things? What are the ways of bringing liquidity to markets? What have been the things that have hampered liquidity so far in your view?
Well, I think if we had some, you know, horse semen and more exciting products, that would bring more liquidity. But no, I think that, to be honest with you, it's kind of, well, we're in the very early stages. I mean, this technology has been around for, you know, less than a few years. We can't expect instant liquidity. I think that, you know, obviously, I think that what Douglas said about the Amazon generation and this kind of new generation that's coming up, that's, you know, they live with technology. The fact that there's no 24/7 market for stocks, when you can, you know, bring up anything on your phone instantly, you can get your, you know, your, I don't know, Deliveroo or whatever at any point in time. It's a bit silly. So I think that with the younger generation, there's going to be a deeper understanding of this technology. There's going to be, you know, more appreciation for security tokens. I think that basically, I think, you know, I agree with Douglas that if we get some, you know, cool products that will be tokenizing, or like BTSs that Michael mentioned, we get those kind of players into the space, it's going to draw attention. It's going to give credibility to the space. I also think that, you know, just, you know, as I said, over time, we're just going to see more. You know, we're going to see more and more trend towards digitalization of these kind of assets. And I really think that, you know, it's just a matter of time. It's a matter of getting the right players in the game, and also regulations and getting institutions in. So I think that, you know, as time moves forward, we're just going to see, it's inevitable that we're going to see this.
Sure, yeah, you're saying kind of it takes time, and in time it will happen. But I wonder whether, you know, what can we do to kind of fast track or help it maybe? I mean, Mike, you have a business model where you kind of, I know you're regulated by the FCA for some of your activities. You're got a very glamorous Barbados regulation, I think, for your exchange. I hope you get there occasionally. But you know, how do you see the whole liquidity side of things? What are the challenges? What are the solutions? Or do we have to, like James says, is it really just a matter of time?
I think it is to a large extent a matter of time. I think anyone who wants instant liquidity is it's a fool's paradise. I think the reality is, I think it really depends on the sexiness of the product. It's like Douglas was saying earlier. If you go into real estate, you buy real estate for a long-term hold. You don't buy it to flip it on a daily basis. I do think, though, however, at the same time, if you can have internationalism, globalization of this, I think it becomes far more capable of being traded more on a more kind of liquid basis. So if you take, for example, Venezuela or Ethiopia or any of these countries that are going through, say, political or stability issues, then sometimes I actually think for them to buy an asset in, say, Manhattan or wherever it is in terms of real estate, I think it's quite useful for them. Whether or not it appreciates in value particularly, I think it's more or less a stable coin, but in a securities market. So real estate, I don't see people buying and selling and flipping, but I do see the access points coming from other jurisdictions where they want to be in a safer environment. I think in terms of liquidity, I think it really does come down to that sexy product. I'm not talking about horse semen here. Sorry to bring it back to that. But I do think if you do have access to that Mariah Carey, and I think if you think about it, someone like Rihanna, and I only use the example of Rihanna because she's originally from Barbados, but she's got 80 million followers on Instagram. If she was to get 1% of her followers who were investing in her products and her back catalogue, her beauty products, etc., that's 800,000 investors. Now, 800,000 investors very quickly start trading. I mean, in the old days, when we were younger, we used to trade football stickers. And we used to pass them back and forth and swap 1 for 3 or whatever it ends up being. These days, people are trading trainers and Supreme products and all of these things on StockX and stuff like that. So I think the millennial generation, they're quite used to this. They're used to in-game currency, as you were saying earlier. They're used to loyalty points and various bits and pieces. I think what we've got to do is the more we actually educate people that this is an environment, and I do think it's about gamification. I think Robinhood has done very well in terms of gamification. And I think if you have the right access points for people, you don't make it too onerous in terms of being able to get onto a system, and you use gamification to make it a bit more fun, I think you'll start finding that people will start trading and it will create better liquidity pools.
Okay, good.
But I do think also you have to go back to the traditional as well. I mean, I know we're probably all speaking to some of the similar people in terms of market making activities and trying also to get some of those large institutions, and especially in the early days, to help provide some of that liquidity that won't exist unless you've got some people making that kind of first move.
Okay, no, thanks for that. And actually, market makers is something I want to come on to, but maybe before we kind of focus on that, Douglas, from your side, I mean, Open Finance, they're a well-established STO exchange based in the US, announced that they were sort of getting into difficulty or unable to make money, questionable about how they would move forward. But then, you guys have swooped in and picked them up. And so I'd be interested to get your take on the challenges of liquidity so far and how you see that changing.
Yeah, we've always admired Open Finance. I think that these guys were real pioneers in this space. I think they were the first in the US to get that digital license for ATS and broker-dealer, and phenomenal team. I think that one of the problems or the issues that all of us are going to face is a lot of these sexy issues, or even real estate. Let's say you take a real estate $300 million deal, given that it's barely going to trade because people aren't getting in and out of this all day long, you're not going to find a market maker, or you're not going to pay a market maker $5,000, $10,000 a month to be making markets on a daily basis, 24 hours a day, 7 days a week. And in a $2, $3, $4 million type STO, and that's kind of the size of the sexy ones that sound exciting. Again, they're much too small to expect a market maker to come in and start making markets. I'm 24, 26 on horse semen, all day long. It's just not going to happen. Like these are such small sizes in terms of market cap that excitement's not going to be there. So I think that there's going to be illiquid niche markets, but the only way they're going to start trading more is by having the retail investor be able to invest in them, as opposed to just the accredited investor. That's the first thing. But the second thing is the real liquidity in this space will come when we start tokenizing current issues that are sitting there in the market. Now you see that as well with overstock. So overstock would they've got the underlying stock, and then they have a tokenized version of it, and then a market maker comes in just to arb. And it's the arbers that will end up becoming the market makers, as opposed to us paying someone to make markets for us. So, if at some point Joe Blow that's sitting there on NASDAQ says, I want to get tokens version on 20% of my float, and we float it, then that NASDAQ market maker that market makes for them right now on the NASDAQ will turn around and say, I want to take markets as well on your exchange, just so they can arb the two exchanges. At the same time, let's say I list something in the US, and then Simon, you also list it, and Michael lists it, and Mr. Parker, James lists it. Well, now you're going to have this arbitrage where you're trying to pick off one exchange against the other. And I think that that's how we're going to end up getting folks excited. What you've mostly found with a security token is, T0 would be a good example. They create a security token, it just lists at one exchange. That's not really taking advantage of the security token nature. The digital token can trade on multiple exchanges at once. But if a token does trade on my exchange and on Simon's exchange, well, there's going to be all sorts of interest, because there's going to be the arb between the two of them. There's a little bit of a currency differential there as well. And now suddenly, we're making security tokens sexy again, in that you've got to have it trading in multiple places for the market maker to actually be interested. And whether that's multiple places in that you've got on a legacy exchange and a digital exchange, or internationally in the UK and the US, that's how we're going to end up bringing market makers, because it's absolutely not worth paying a market maker money to make market in a $400 million real estate deal, or to make a market in a $3 million horse semen or whiskey deal or something of that nature. They're just too small to get to pay someone to get involved.
I think that's right. And also, certainly sort of experience at Archax too is, if you kind of look at the different projects that are coming along as STOs, some are naturally more liquid or less liquid than others. The type of trading that some things are never going to be liquid and never should be, and there's nothing wrong with that. It's just the nature of the asset where others are much more liquid potentially. And James, what about from your side? I mean, do you get involved with market makers? How do you see the sort of liquidity picture?
Yeah, we're talking to a number of market makers. I see the liquidity picture. I think for certain things, there's always going to be some kind of interest, no matter what the medium. I think that for some, the medium actually excites them. I think that, insofar as liquidity, I think that, there's two ways of kind of going about it. One, you just hope that people buy it on the exchange, or two, you're going to actively advertise it. So we're actually trying to advertise our exchange, and a lot of the we're also helping some projects advertise in the region some of their their assets. So I mean, I think that I think that security tokens are interesting, because I mean, the liquidity will come from not just the interest in it comes from both the interest of the fact that the asset is digitalized and it's on security token exchange, and also the asset itself. So for example, if we take, I'm going back to the example, horse semen, I guess there's many people that love horse semen or something, or there's an interest in the semen market, and those people might be drawn to buying the security token. And maybe and maybe people that people that are also fans of security tokens may also think, oh, horse semen, that's interesting. I've never gotten into that. Let's get into that. So I think that you've got kind of two I guess you've got kind of two parties that may be interested in the horse semen token. And I feel like that's going to be kind of the driver of liquidity, is like the kind of interest in the product and the interest in the rising of the technology.
Yeah, and I think engaged communities is key, isn't it? Like that kind of
Yeah.
fuel interest and fuel activity and everything. Okay, well, we're at kind of 45 minutes of the hour, so I just want to ask the organisers if any questions have come in that we can pick up. If not, we will continue. But are there any questions from the audience at all?
I've just got to say, whilst you're waiting for that, I think if Archax doesn't tokenize this horse semen, I think it's going to be a problem for the community.
Yeah, who knew that was going to be such a focal point of this panel? But anyway, Boris, are there any questions from the audience? Or?
Yeah, there is actually a question about microcap stocks. So many security tokens are actually have a very low market capitalization. There are 5-10 million raises, and even now it's $100 million stocks trade with very narrow liquidity. So I wonder whether it makes sense so to list, and whether we can expect some liquidity for them to emerge.
Anyone like to pick that one up? Douglas, yeah.
So you're right. I'd say that the listings that are out there right now have been de minimis, rather small. And one thing you've found is that I think traditionally with security token markets, at least in the United States, it seemed to be the idea was, let's get someone on our exchange, they'll list, and that's it. Now, when someone lists on the New York Stock Exchange or on NASDAQ, there's a fanfare, there's an excitement. And James, I think, linked on this as well. It's when someone lists on your exchange, you have to bring awareness. And the only way you bring awareness is you have to have a community that's associated with your exchange. You know, one of the reasons that we decided to do our IPO the way we did it is that every time someone comes to our site to buy security tokens in this IPO, they also become a user of the exchange. And I think for the first 3 days, we ended up signing 3,000 people up. And that's maybe twice as what we saw the average security token exchange had signed up in the last like 3 years. By the end of this, maybe we'll have 25, 30,000 people signed up for the exchange that can trade security tokens. That's also 30,000 people. We've got a mailing list that we can talk to and say, look, we've just brought this in. This is really exciting. We'll do an AMA. Let's all get involved and let's discuss it. And that then brings an awareness towards the product that you have in your exchange. And doing regular AMAs for the folks that are issuing with you, making sure that the issuer feels special and knows that they're special is important, but also having a community that you can relate these specific instances to and get directly into people's mailboxes and say, look, we're now listing this. Are you excited? That's the kind of thing that a bank does. A bank does an IPO and it sits there on the exchange, and it's, before it lists, it says, hey, to all of their brokers, go out there and find out what the interest is. And I don't think security token markets in the past have done this. I think they've been excited to get a pipeline to list somebody, to stick it on the exchange, and then they've hoped that one of 1,000 people that signed up for their exchange will one day pop on there, see it, and say, oh, that's interesting, maybe I'll take a gander. But that's not how you should be running these things. It's about, you get an issuer, that issuer becomes your baby, and you want everyone to know about it, because obviously the more people know about it, the more people start trading it, the more volume there is, and the better for the exchange.
Thanks for that. That's a good answer. And if anyone in the audience has any questions, please use the chat facility to send them in. Yeah, Mike, do you want to add?
Yeah, just to add to what Douglas was saying, I think what you've got to bear in mind as well is most exchanges around the world, they have different tiers of stocks and the liquidity within those. So the top 25% trade fairly regularly, the next 25% trade fairly irregularly, and the bottom 50% are zombie stocks. They hardly trade at all. So I think it's really important to realize that we're not suddenly going to make huge markets and huge strides to drive up the liquidity. But I do think one of the things that is really interesting potentially for these token exchanges, now, obviously it's going to vary from exchange to exchange, is the capacity or the size of the listings that we're prepared to accept. So, for example, there is a thing called an expense ratio. So when someone lists on an exchange, their expense ratio to go through the listing process, to get all the legal documentation, etc., marketing right, you don't want that expense ratio to be so high that actually it defeats the purpose of the listing. So we will typically have a minimum listing, ideally of around the $5 million mark, but it might be slightly lower in certain circumstances, and it really depends on the kind of the way that people can go about the whole process to bring the cost down of the listing. So in terms of having these micro stocks, I don't see us necessarily, from our perspective, from Tokenise, we wouldn't necessarily tokenize a $500,000 barrel of whiskey, but we might tokenize a collection of whiskey that is worth $5 million or something. Because by the time they've done that, I think you've got to bear in mind that if it is very low micro stuff, then it's probably more suitable for crowdfunding. Now, that's not to say that these crowdfunding platforms shouldn't have a secondary market, because absolutely they should. And I think that is the evolvement of crowdfunding as well. And that's actually how we originally came up with our concept. We wanted to create secondary market activity for crowdfunding opportunities. So I think that is a natural evolution as well.
No, thanks for that. I'd like to bring the conversation round to one last main area anyway for this panel, and that is...
my apologies for interruption. There's another question in the section. I wanted to remind you. Before the question, I will also add from my perspective, I think that actually complex products that may be one of the solutions to this liquidity problem. So if you have many properties valued at each of a few millions, they are going to trade purely. But if you have a fund that unites hundreds of such properties, then the market cap and liquidity is going to be somewhat better. Even though maybe real estate is not the best example, given that people don't trade real estate often. So the question from the chat is, what are the requirements for project to be listed? It seems someone has a very practical interest in this conversation.
So the requirements for a project to be listed, and I guess that's an interesting one, because obviously we're all operating in a regulated world, and we have to worry about our regulations not only in the jurisdiction we operate in, but in all the other jurisdictions where people may come from to trade or with issuances too. I mean, what about kicking off with you, James, for your marketplace? I mean, it's impossible to go through absolutely all requirements, but what are the sort of the key requirements for you when it comes to listing? Oh, and I think we've lost James. So let's go to you then, Douglas.
If it's registered with the SEC, we'll list it. And it's really that simple. We want to have a listing to be registered. And if it's registered with the SEC, then the due diligence is sitting there. People can see what exactly it is. And I think that's the most important thing for us. The SEC, and obviously we'll do our own due diligence on the issue. But generally, we like something that's got a real auditor behind it, that's actually registered with the SEC in some way. And it could be a Reg D, Reg A+, it could be an S1, F1. It doesn't matter, but it has to have regulation. Now, it could be regulated, let's say, by the German authorities. But in that case, then we'll only offer it to German folks that come to our exchange to trade on it. And every single, where someone's regulated defines then who can actually buy and sell it. For example, if it's regulated by the SEC, maybe there's 30 countries that can trade that product without us, having to get deeper in the weeds when it comes down to the other regulation. Sometimes, though, if I want to list what I have up in Canada, maybe I've got to wrap it for the Canadian authorities in some way. So regulations in general change by jurisdiction. I think what the exchange's job is to be able to list something that's registered in some way with a certain government, but then to restrict it and how it's traded to just those people that can trade that specific product. Because regulation in Liechtenstein may be important for guys in Liechtenstein, but what does it mean to the US investor? The exchange has to know that. Registration by the SEC, does that mean that someone in Germany can buy it automatically, or is it limited to maybe 50,000 Germans? I don't know. But the regulations don't go across borders often as much as we'd like them to do. And sometimes if something's regulated in one jurisdiction, doesn't mean that anyone in another jurisdiction can trade it.
Great. No, thanks. So, and what about from your side, Mike? I mean, what does it have to
do? We can pretty much take a security from anywhere around the world and tokenize it and list it on our exchange. Whether or not we can then market it to all of those participants or potential investors, as Douglas was saying, is not necessarily the case. The most difficult market, no offense, Douglas, is for us to deal with the US market. The long arms of the SEC are far reaching, and the implications there are quite difficult. I mean, we do see it that we can, as long as they're not on the blacklist. I think for us, it's key. It's got to follow some key components. It has to have a compliant prospectus according to the prospectus regulations and the rules of our exchange. We're doing that to EU standards or what they call ESMA standards, so that with the exception of the US markets, it tends to be passportable around the world. We also have to make sure that everyone's doing the relevant due diligence, KYC checks, background checks, AML checks, etc. So it's the credibility of the project coupled with the right regulation and prospectus in order to bring it to the marketplace. So what we don't want to see, and no offense to any of the crypto people out here, is we don't want to see a reinvention of the ICO days where people were coming up with valuation of hundreds of millions and not having any kind of practical demonstration as to why that valuation is there. So I think it's far more based on fundamentals, because it is going to be scrutinized by the regulators.
Thanks for that. I mean, from Archax's perspective, for something to list with us, it needs to be a transferable security as defined by MiFID. That's by the European regulations. So similar kind of thing. But I want to move. We're sort of approaching the end now. I want to move on to one last question, really. So keep it reasonably brief. I think we probably have 5 minutes or so it's not too bad. But I just want to sort of get your thoughts about traditional financial markets and these purely digital blockchain-based ones. What does the future hold? When are they going to merge? What are the benefits for traditional markets that are being sort of pioneered by all of us with digital markets? How do we see the two colliding at some point? Where will the benefits come? How will change happen? And Douglas, maybe you could kick that off.
Well, I think that there's three sides that need to bridge this. First comes from the regulators. We know that regulators want AML, KYC, digital securities give that. And so, we know that they're going to be pushing for it. The second one is going to be the issuers. Issuers right now aren't aware because their bankers haven't told them about the benefits of digital. Obviously, the fact that you deal directly with your stakeholders is very, very important. The cross listings of a couple of lines of code and not lines of lawyers, that's also exciting. And fractional ownership. Most people in the third world can't afford to buy the average US equity because it's 1 week's wages. Now, fractional ownership means that everyone around the world can start owning Amazon or other stocks. That's also exciting because now you're not just reliant upon the investors in your own country. But then you have to look at the audience, the millennials. And the millennials, we've already decided they're digital savvy. They want 24/7 trading. And so they're going to start demanding it. At some point, they're going to turn around and say, you know what, Nike, I'm not buying your stock unless I can trade it over the weekend, unless I can trade it overnight. And I think that that's a very powerful movement that's going to happen. And it's also the generation that's about to inherit all the baby boomer cash. And that's the largest ever wealth transfer in history. So, these what we call kids, I guess, is people under 40 now for the millennials. They're going to end up demanding that things start trading 24/7. So it's now we can talk about how great it is, but it's irrelevant what we think until the bankers at Goldman Sachs, Bank of America, Lazard start talking to corporates and saying, look, this is exciting. Now we know that's going to happen because we've got the text messages from every head of blockchain at every bank that say this is a new watershed moment. We're excited now because we're telling someone to now do an IPO on the blockchain after 5 years after we told them to do an IPO on a regular exchange. And they pick up their 3, 4, 5% every time they have them list somewhere. So they're excited about this. And the regulators are now beginning to hammer it down. There's no way that Clayton would have come out at the SEC and said he sees all assets moving onto the blockchain if we hadn't spent 2.5 years, 953 days, knocking on his door and answering 8 million questions that came back and forth between the two of us. And so there is a movement towards that. Now, obviously we've got to be very, very careful and make sure that we have that runway to be able to last. And we've already seen there's a lot of guys that started 2 or 3 years ago that ran out of runway. And, you know, COVID, I think, certainly accelerated that to a great extent. And so we've got to be, I think that our job really for the next year or so is education. And I think Michael said this, James said it, Simon, you and I have talked about this as well. It's that educating not just individuals and the media, but educating investors and educating issuers. Issuers is key because the issuer needs to understand in the legacy space that by doing this and switching to digital, they'll save money. And saving money is very important if you want to have a higher EPS.
Yeah, I totally agree on that education point. You know, it's a vital thing we all have to do. James, what about from your side? How do you see the landscape evolving, and you know, across both the digital exchanges and the traditional, and how that may all pan out?
I see in the digital space that there's got to be a separation of security tokens from crypto. I think that crypto, for a lot of people, especially in Japan, with Mt. Gox being here, and you know, I don't know if you heard about the NEM scandal. It's got kind of a negative association. So when you say the word token, all of a sudden, you know, they're thinking of hackers and they're thinking of you know, ICO scams. So I think that what we've got to kind of emphasize more is the security aspect. And I think that Michael said that. I remember he said that about the name of his company. But I think that that's really got to be it. I think, you know, the fact that there is the largest wealth transfer in history happening. We're going to get the young generation having cash. They don't want it. They want to park that cash somewhere that's secure, that's going to appreciate in value. They don't want to just keep it in their banks. You know, I don't foresee people, especially the people that are like, you know, I guess Zoomers, not even millennials, but those people, I don't see them, you know, being satisfied, being okay with a non-24/7 market. Like, I think that digitalization of these securities is just a matter of time. I think that, you know, I think that once we get legitimate, sexy products on the marketplace, and we get, you know, well-established exchanges that have trusted followings, and we clear it with the regulators, it's going to, you know, it's inevitable, and it's going to happen in the next few years. And, you know, as time moves forward, like, you know, people will not be using the stock market. People will be like they'll ask, what is that? Like, I own security tokens. I don't own stocks. That's going to be the future.
Thanks. Yeah, I mean, I think you're looking way into the future there, but yeah, it's interesting. And then we could get on to the whole DeFi thing if we had time, but we don't. But I think another area that I think is interesting is post-trade. I mean, if you look at traditional financial markets, what happened, I mean, although they're very digital upfront for trading, you know, what happens post-trade, there's lots of intermediaries involved. Everyone's got their own books and records, you know, the reconciliations that happen and everything else. It's all a bit of a inefficient nightmare. And actually, you know, blockchain, DLT technology has the potential to kind of sweep a lot of that aside and, you know, really improve efficiency, remove friction. It's not going to happen overnight. And clearly there is regulation that dictates that some of those functions have to remain. But, you know, over time that could change. But Mike, what's your view, kind of looking to the future across all types of markets?
I think it's quite an interesting one. I don't think we're going to displace the existing exchanges. I think they're so large and they have so much capacity on them. I don't see them necessarily being displaced. I do think one of the things our chairman said, and he used to be a director of the London Stock Exchange, is actually some of these inefficiencies in the market benefit the exchanges. And that is because they can charge more for their services. So the more efficient we make our services, the kind of more difficult it will be for the new issuers and the new Amazons and Googles of tomorrow to go to these traditional exchanges and say, actually, if these people are doing it this way, why are you still doing it in this historic way? I think in terms of digitization, I think all exchanges are digital. I don't think that it really makes a lot of difference if you put a unit in whatever, the London Stock Exchange or a unit in any other exchange. You're just trading those units, and what they represent is really down to how you've created that security. So I do think that people will move on to it. I don't think blockchain is necessarily the evangelical thing that everyone thinks it is. Sorry. But I think it's a way of recording activities, and it's an immutable ledger. But I think it stops there. I think there's other technologies that can still record things. But I think the other thing that we've got to be mindful of is private blockchains, public blockchains, the cost of using a blockchain. I mean, if you look at things like Ethereum gas prices, it's just ludicrous. So how do you attract the micro investor when you want to do a transaction through Ethereum and it's charging $10 for a gas fee?
Sure.
So I think over time there will be kind of more quantum resistant blockchains that maybe become the security chain of the future. And I do think that there will be more collaboration between, or I hope there will be more collaboration between us small exchanges, so that we do end up rivaling some of the large exchanges and taking them on at their own game. Because let's face it, all of the innovation really happens within the small organizations. As you start growing larger and larger, you become less nimble and less innovative. So I think it's by working together across border, across different regulations, that actually we can come up with some fairly interesting concepts between us to drive it all forward.
Yeah.
No, thanks very much for that. I can see Boris has popped up, which means we're pretty much at the end. If it's okay, I'm going to ask everyone for one last sentence, one sentence only, just on one point. Is that okay? That's, 2020 has been a bit of a challenging year for many, many reasons. COVID, obviously a key one. But 2021, hopefully is going to be a more normal year with a vaccine, it looks like, coming to fruition. So where do you think, in a sentence or so, where do you think the STO marketplace will be in 12 months' time? So as we're kind of going into 2022, what do you think the state of play will be? And James, I'll kick off with you.
I think that, in a year's time, things will be a little bit more established. Maybe regulators will stop focusing on COVID and start focusing on other things. And there's a bit more opportunity at that. I wouldn't say it's established, like fully established, but I'd say that we're a step on the road.
Okay, thank you for that. Mike, what about you?
I don't think it's going to be a massive industry. I think there will be listings. I think we've got to create some excitement within the industry, and we've got to use other people to educate people. We can't do it ourselves. It's too expensive, too time consuming. But I think if we can use the Mariah Careys, etc., I think that's where I see it actually posing as really interesting and creating new hybrid products.
Thanks for that. And finally, Douglas, I've been watching dawn rise over New York City behind you. There's now daylight. But what's your prediction for 12 months' time?
I think this time next year we'll have a couple of listings that are also trading on NASDAQ. I think that the things are going to move a lot faster than I think any of us realize. And I don't know if you remember how quickly email was brought into the world, or how quickly music moved from CDs to MP3s, or how quickly people got rid of horse and buggy and got into cars. But when you get huge moves like I think we're going to see in the digital space, they happen very, very quickly. Now we're all fortunate that we're sitting here with our baskets. And so we're in the right place at the right time, but I think things are going to happen a lot faster than we've expected. I think that the big breakthrough in the United States was the ability to do a security token for retail without any lockups. And I think that came from the INX token. And the SEC has described it as being sort of, now there's a map for everyone to move on to the blockchain. So I think things are going to happen very, very quickly. Ernst & Young kind of gives us that idea as well, based upon the conversations they're having. So I think in 1 year's time, we'll have 2 or 3 companies that are sitting there and trading digital and legacy, beginning the migration.
Great, brilliant. Thanks for that. I kind of agree with all those points. I think also, and we touched on this earlier, we'll be talking much more about the issuances and much less about the technology, which is a great thing. And obviously, we'll all be trading pros and horse seamen. On that note, I'd just like to thank all the panelists. It's been a great hour that's flown by. Thanks to Boris for hosting, and enjoy the weekend, everyone.
Thank you very much.
Thanks a lot.
Thanks for having
Thank you very much.
Everybody for participation. The panel was fantastic, and the points you brought were deeply insightful. And And I'm pretty sure that you will be able to build these secondary markets for us all and to advance the industry forward. Thank you, everybody, for joining us today on Saturday for bringing this enjoyable conversation, and hope you all had a great weekend.
Great.
Thank you very much. Thank you.
Take care.
Bye.